If you are single and have between 1 to 3 children and make between $46,000 to $56,000, or if you're married with 1 to 3 children and make between $53,000 and $63,000, then this video is for you. So what am I referring to? I'm referring to the EITC, also known as the Earned Income Tax Credit, and you probably would hear it as EIC, Earned Income Credit. They all mean the same thing. When it comes to credit for dependents, IRS has been very, very generous, especially for the low to moderate income families. So what is an EITC? It's simple. Just like I just said, it's a tax break for low to moderate income families to help them financially with their children. It is a refundable credit. I talk all about the refundable credit in my child tax credit video. Make sure you watch that. It's all it means is that you can get a refund even if you owe money. So if you owe $1,000, you have the earned income tax credit over that threshold, so you will get a refund for the difference. Okay, so now let's talk about the qualifications. What qualifies you to get that EITC? First, you need to have income, more specifically earned income. It has to be $63,398 maximum. Some examples of earned income: W-2 income. If you do 1099 gigs, you do Uber Eats, you drive Lyft, or you do any subcontracting work, independent contracting work, and they issue a 1099, this is good. Even if you do work for cash payment, you must report it in Schedule C. Schedule C, that means you earn that money. Okay? So income is important. And number two, investment income. If you have investment income, it cannot be no more than $11,000 for 2023. So make sure your investment income, you keep track of that, because if you have more than $11,000, you are not qualified. And the third one, Social Security number. Of course, you need to have a valid Social Security number in order to get that EITC. Okay? And then the next one, it's citizenship. You must be a U.S. citizen or resident alien. And there's a form 2555, foreign earned income. You cannot have that form. You cannot file that form. That means you have money out there outside of the U.S. And if you have to file that form 2555, you are not qualified. And there's also the age. If you have no kid, so the age requirement is between 25 and 65 years old. That's for you. And if you don't meet that and you file a joint return, if your spouse meet the age requirement, you can still take the EITC even if you don't have any kids. So there are special rules for individuals that are separated but still married. You cannot live with your spouse during the last 6 months of the year, and you cannot file a joint return with your spouse. Your dependent must live with you for at least half of the year. So the filing status that can claim that credit, it's single, head of household, married filing jointly, qualified surviving spouse, or married filing separately. And the head of household, you can claim that. That's if you have dependent children and you are not married, you are the head of household. A lot of people, they do claim the head of household when they in fact they are single, and the reason some of them do that is because you get a higher deduction, standard deduction. So who qualifies as a qualifying dependent? If you claim 1 to 3 children, each child must meet the following test. The age, the child must be under the age of 19, and the child cannot be older than you or your spouse if you are married. There's an exception if the child is in college. If the child is under 24 and we're a full-time student, that's qualified. If someone is declared to be disabled, permanently disabled, there's no age requirement. It can be of any age. That person is your qualifying dependent for the EITC. And there's the residency test. The child must have lived with you for more than half of the year or with your spouse and in the United States. Let's go over some numbers. You can see the chart here of all the amount that you need to make your AGI. It's from 0 kid to 3 children. The maximum if you married, filing jointly is $63,398. The maximum if you not filing jointly, whether you're widowed, single, or head of household, $56,838. So let's go to the crazy part. How much do you get? If you're not filing with any kid, you can get up to $600. It's still not bad. If you have one child, you get $3,995. Not bad at all. And if you have two, get $6,604. And if you have 3 or more, it's really, the cap is at 3. The cap that you can get is, you ready for that? Are you ready? $7,430. So this EITC is really crucial to help low-income family. In my days with IRS, I've seen where families, they splurge once they get the refund. Also, some of them, because they've been in debt, once they have that money, nothing really goes in the pocket. They have to pay it back. They're always playing catch up, unfortunately. So some of you probably are qualified and you don't even know. So if the past 3 years, if you were qualified, you didn't know, you can still go ahead and claim that credit and file an amended return. It's important. Or if you never filed, you're thinking that you're not qualified, and now because of this video, you find out you are qualified in the past 3 years, go ahead and amend those returns and get some money. All right, get some moolah. Okay, for the refund. The refund system works a little differently when you have child credit, dependent credit on your return. Per law, IRS cannot release the refunds no sooner than approximately February 27th. So that's if you file, you choose direct deposit, and there's no error. There are no errors on your return. If IRS finds errors, unfortunately, it can cost you a lot. So when you're filing for those credits, make sure everything is accurate, okay? You can potentially have to pay it back, everything, with interest. And there's a form you have to fill out, 8862. It's a form that you filled out after they disallow the credit, and you have to fill it out to send to the IRS. You could be banned from getting that credit for 2 years, or if it was fraudulent, it can be up to 10 years. So just make sure you are qualified. I've seen also when I was with IRS, a lot of individuals, when they have more than 3 kids, the extra kids, they let their cousins borrow them for some money, and they let their friends borrow those kids and claim them for EITC even though they're not qualified, and share the funds. Make sure you don't do that. Be honest, be ethical. If IRS finds out, it'll cost you a lot more. And for you tax preparers, if you make errors in those returns, or you didn't do your due diligence to make sure the taxpayers really qualify for the credit, you can get hit of $600 per error. That's for all the credits. It could be child tax credit, earned income tax credit, other dependent credit, education credit. Every year IRS does the due diligence compliance check audit. I used to do those. You access a lot of money to the tax preparers, and you can get hit $600 per error, and it can be up to $2,400 per return. This is all penalties. So it is not worth it. Let's just say you file the return, you charge the client $400. It's not worth it. So make sure you do your due diligence and do it accurately, and do all the check. Make sure the client, your taxpayer, is qualified. This is all about the earned income tax credit. If you want more information about your qualification to check if you're qualified, you can go to irs.gov. They do have some great tools, assistance tools, to help you to see if you are qualified. So if you like this video, go ahead and share it with a friend. Make sure you like, subscribe, and hit the notification bell, and come back for more. I do have a lot more videos that I'm currently working on. I'm new to YouTube, so I would appreciate your support. Go ahead and subscribe for me, and I will see you at the next step to financial freedom.